Guys, I am behind today because my thinkorswim was down for the last while. Just got it back up, trying to get filled on a couple trades. And the SPY definitely would have filled 10 minutes or 20 minutes ago, but it won't fill now, and I'm annoyed.
Uh,
But
what is that for?
I'm just stacking on some longer term positions here.
Hmm. Uh, Nate, I don't know if you've heard about this asset before, but there's something, I think it's called Bit Bitcoin, and it looks like it's
I
doing pretty
have
good.
heard. I
I
have
don't know if
heard.
you've heard of that one before.
Seems to be all the rage. Very happy to say that we pretty much call our shot there on opening playbook with Bitcoin. I've been hammering it the last couple of days, especially, and here we are, just absolutely ripping to all-time highs. If you guys in any of the trades that we put together recently, including the two-way trade, you guys are in pretty good shape right now.
Yeah, we've got one open, the perfect Bitcoin trade. Man, took some time, but up 142% now on IBIT. Love to see it. Also, your good boy ANET is going today too. Looking
Yeah, we
nice.
got we got some mainnet. Unfortunately, I was telling you I had a oh wow, it's really gone. I had a service now trade that was $100 in the clear that I could have basically got the full value and just let it on the last couple of days. And service now is down $100 in the last couple of days. And so now actually need to pop back up by the end of the day when I was so safe. Yeah, little one of those ones where I wish I would have put a target. Obviously, easier said in
Right.
hindsight because a whole bunch of my trades have been getting full value, which has actually been nice for the ROIs. But service now, I'm kicking myself over just a little bit. All right, sorry, I'm trying to get my bearings here now that I'm just getting thinkorswim loaded up.
Yeah, I don't know what happened with Think. Did you guys all have issues with Thinkorswim this morning? I had to restart it a few times. It looks like it's working now.
Also, I keep going back to the well on Walmart and I keep getting slapped. Walmart will just not get into gear at all. I mean, the safe like income machine style trade I have is still fine, but I've been trying to get it directional and it just won't really go for me. All right, guys, I am a little bit less prepared on the actual charts and trading that I want to do today. So you will have to bear with me as we jump into Thinkorswim, and I'm still kind of trying to find my way around. But in the meantime, let's go ahead and get rolling here. Actually, let me start sharing there. All right, you should be seeing my screen now, and we can get rolling here. So, a couple things today. Quick market outlook. I'm going to talk about Bitcoin and what my plan is. I've already obviously got some pieces stacked up on Bitcoin. What I'm calling the mag lag trade. I'm going to cover that here. The debit spread recap. I won't go as in detail as I went during our 90-minute session yesterday. And yeah, Deanna, we could open the chat for everyone. I won't go as in depth as I went yesterday, but two things. Number one, I will do a recap that hopefully gives you a high level or a medium level understanding of debit spreads because I think it's super important based on the way that Graham and I trade. Also, we are loading that up into all of the key members areas, the recording. My suggestion, if there's one recording, if there's one thing that you actually sit through and watch, 70, 80 minutes of content, it would be that debit spread training from yesterday. It's going to be in the members areas. We'll get it put in opening playbook VIP as well. And so I'd recommend going through that. If you can. Again, it's pretty deep, but I think it'll give you a really good basis for a lot of the types of trades that we make. So that's our agenda, and then of course, income machine as well. By the way, we are going to talk about the income machine later, so you got to do the disclaimer. I'm going to give you my own personal money trades hit about 90%. win rate. Profit factors is close to 5 on those. Of course, we don't know if we care about profit factor anymore. That's a different discussion. But as I talk about the income machine a little bit later today, you guys know the rules. No future guarantees, risk of losing. Any trade could lose, just like that ServiceNow trade. And so we'll get that. And yes, there is a weekend trade, but not really going to be a short-term weekend trade for the one we'll do an opening playbook. Going to be a little bit of a different trade on Bitcoin. So market outlook, honestly, guys, I don't have a whole lot to say here. We're in this little squeeze. We're in this little cool off that we predicted would probably happen after we cracked new highs. We're tightening up tighter than I would have thought. I would have thought maybe we would have got a little bit of a deeper bounce, maybe touch, down to 610 or something like that if we got some cool down. Right now, it's really tight. So just watch that range. If it breaks to the upside, I think we've got some gas in the tank. If it breaks to the downside, I think we'll kind of come down into the 610 range or very close to the previous highs, and that'll be a decent support level for us. But until we move out of this really tight consolidation, not a whole lot to say right now for the market outlook. Obviously, income trades and things like that working great in this slow moving market. Okay, let's talk about the Bitcoin pair trade that I want to give you today. And by the way, I lost 100K to learn this very hard lesson. Now, let me tell you what happened. Going back to the fall of 2023, I had been stacking up a Bitcoin position, predicting that Bitcoin was going to rip, which it did. And I was going, stacking on some out of the money options at a pretty aggressive rate, looking for Bitcoin to hit 100K. And you guys all know Bitcoin did hit 100K. And if Bitcoin hit 100K, I probably would have made like 120, 130 grand on my options relative to the price of Bitcoin. Well, while Bitcoin hit 100K, my options all expired worthless, about $30,000 in out of the money options, all expired worthless, and I lost all that money instead of making money. Well, let me show you why that happened. It's because of this chart here. So, does anyone know what ticker this is by chance? This is BITO. So this is not IBIT, this is BITO. Now, let me show you something. When we overlay the actual Bitcoin price. So here is, going right back to here, Bitcoin's price, as you can see, going, and made all-time highs. And as we scroll further here, notice that Bitcoin made big peaks here while BITO grinded lower, and then when it tried to recover was about 30%, about twice as far off the peaks as Bitcoin itself. If BITO was up here, I'm up 120 to 130 grand. If Bitcoin, but BITO didn't get up here, it stayed down here, and my options break-even line was somewhere like this. And so not only did I not make any money, I actually lost about $30,000 on top of that of the actual BITO option premium. So I said I lost 100K to learn this lesson, probably more like 160K to learn this lesson, that BITO does not actually correlate. Now, they have done some things to try to make it a little bit better, but it still does not correlate perfectly to Bitcoin. It lags behind quite a bit. If I scroll all the way back to the inception, here you can see since BITO was launched right there, November 15th, BITO is up 52% and Bitcoin is up 95%. So BITO is up 50%, Bitcoin is up over 90%. Not a good asset. So the sad part is that I lost 100K plus to learn that. The good news is because of that, I discovered a pair trade that works quite well if you're getting volatility in Bitcoin, which I think that will continue to get volatility because I think we'll either make that move to 125K over the next month or so, or of course, we could get hammered and it'll get flush. And yes, TSLL will do the exact same thing with Tesla. When it's ripping up, it'll outperform, but over time, it'll grind and underperform. TSLL will do the exact same thing. But if you go long IBIT, which is much better pegged, and you go short BITO, so what you do is you buy calls here and you buy puts here, what happens over time is that if Bitcoin way outperforms, IBIT as a true representation will have more plus percentage, and BITO will go up, but not as high. And if it tanks, BITO will have more plus percentage as IBIT has less plus percentage. And so it's kind of like a built-in pair trade against itself that should essentially always have an edge as Bitcoin moves. Now, of course, one thing to keep in mind is that if Bitcoin goes sideways, you're not going to get a big enough movement for either one. And so you could end up in a situation where you were to lose on both sides. So that's the big risk of any pair trade, is that you don't get a big move and you kind of just lose time decay on both sides. But if you do this trade and it's moving, IBIT should outperform BITO. Now, I've done this when Bitcoin is ripping 4 or 5 different times. I haven't lost yet, but it definitely is possible to lose. So just keep that in mind. So here's how you could do the trade. And sorry, I was going to have this trade prepared for you, but Thinkorswim was down. So I'm just going to look at it in real time and kind of fumble my way through it, looking at the different opportunities. Now, the key thing here is that you want to have a similar risk, right? So if you're going to put 5,000 on each side, you're going to have a different amount of contracts for BITO as you will for IBIT because they're differently priced. And so you got to have that built into your trade, or else, one could go up 100%, one could go down 50%, and you're not going to get a net gain if you don't have a similar investment in each. So what I would typically do here is give it like around a month. So I'm looking at this August 28th, and unlike almost everything else I do where I do a vertical, here I'm going to do a regular. The reason I'm going to do a regular is because I want one side to have the potential to move more than 100%, right? I want to be in a position where if Bitcoin does go up to 125K, my IBIT options can pay 180%, while my BITO options lose 100%, because plus 180% minus 100%, I'm going to have a net 40% gain between the two. And you want to be in a situation where one can overcome a full loss. Now, usually I'm going to be pretty close to at the money, but I want to go a little bit out of the money because I'm doing this based on the idea that Bitcoin's going to move. So on BITO, I'm always playing the put side. You can see here, it's $22.70. So if I look at the $22 puts here, they're about $3.20. Now actually here, I'll just do it with you. Okay. I want to match how far out of the money I'm going on each side. So in this case, $22.70 is what it's trading at right now. And I'm going to trade the 22, right? So I am trading 22.70 divided by 22, and I'm going about 3% out of the money. All right, so I'm going about 3% below the current price. So now I'm going to go look at IBIT and kind of match that. But this time I'm going to be doing the same expiration date, but on the call side. So again, we're going to the August 8 here. And I want to go about 3% out of the money. Well, how do I do that? Well, IBIT is trading at 67. So I just multiply that by 1.03, and I know that I need to be trading the $69 calls to match it. Kevin said he doesn't see my screen. Does everyone else see my screen? You should be seeing my calculator in my Thinkorswim platform right now. Kevin, I think it's just on your side, so you might have to adjust your screen view. And by the way, Deanna, we should be able to open that chat for everyone to use the everyone chat if they want. Okay. So we're going to be doing the $69 calls. Now, notice if I go ahead and buy a $69 call, it's fairly close price, but it's still going to be a different price. So the next thing we're going to have to do is actually match up the prices. Now, I'm very bullish on Bitcoin right now, so I'm going to start with the call side. I always start with the side that I'm more directional on. So what I'm going to do is I'm going to put about $2,500 on each side here. So should be about 11 contracts, 12 contracts. Let's see what that is. That is, oh, perfect. Nailed it. About $2,500 using the 69. So what I'm doing here, I type in the chat. I'm starting with the August 8 $69 call because I'm bullish. So I'm starting with the call side. And I am paying about 231. Looks like it's actually bouncing right now a hair on me, but I'm going to try to get filled at 231. I'm doing 11 contracts, so it filled right away. Perfect. Okay, so now I'm going to jump over and I'm going to trade a different amount of contracts on the $22 puts because look at the spread on the puts. This is wild how crazy the spread is on BITO, which just shows you kind of what a crappy asset it is, to be honest. Anything Bitcoin related should have massive volume right now, but as you can see, BITO not doing so well. So the $22 puts, I don't even know what price we're going to be able to get filled. Let's see if the 67 is a real price. I'll just do one to see if kind of find our pricing here. You can see now the mid price is 96. So this is a good example of BITO just being a crappy asset. You can see right now in front of your very eyes. I'm assuming these are going to run more like $1. Let me try one at 90. This is why you use limit orders, guys. You don't just want to pay whatever the market's asking. You could pay 2 times as much and have no chance of getting back to profitability. I'm assuming these are going to be more in the dollar range. Give this a minute here. Just got to be patient here when you're trying to get filled on some of these. You want to get your pair in, because you want to have both sides. That's the point of the pair trade. But you don't want to go pay a market price and jump it up. Well, are some of you guys trading because we're narrowing the spread. We're getting some volume in there right now. I don't know if that's you guys just from this call who are narrowing this, because we're actually getting some narrowing of the spread right here, and I'm wondering if it's just the volume from our own squad here doing that. Hopefully, no one put in a market order because you're going to drive up the mid price for everyone. Don't use market orders. That's rule number 1. All right, it looks like we're settling more in this 117, 116 range. Yes, I will post it, Simon, but I'm trying to see if I get filled first. Okay, 116 filled instantly. So maybe that was a little too juicy. Let's see if I can get filled at like 110. All right, I'll go ahead and plug it in there, but I'm not sure what our true price is quite yet on BITO. But by BITO August 8th, 22 put, I think around 115 looks like it's going to be the true price here. And then what I'm going to do is I'm going to put in about 2.5 times more contracts, or about twice as many contracts if it's 115, as I did on IBIT, because I want my actual investment to match. Filling at 117. All right. I'll just pay the piper at 117, I guess. All right. Let's do. I already have $200 in there. So what do I need? Need about 20. All right. So I just got filled on the rest of my BITO. I'll go ahead and cancel these because these aren't getting filled. And now I have that new trade open. As you can see down here, I have BITO and IBIT with a similar amount of contract or a similar amount of total volume because I have 22 that I paid about $1.17 for, and then I have about 11 down here that I paid about $2.30 for. All right. So no, you can't place them under one order, two separate trades. Eventually, they probably will let you do one order on a pair trade. They have not allowed us to do that yet. That probably will be coming. So that's the pair trade that I use when Bitcoin's really ripping. Obviously, I trade Bitcoin itself directionally, but I also have quite a bit of capital on Bitcoin. And so I try not to get too crazy one-sided, even when I'm excited about Bitcoin. And this is a nice way to kind of hedge, have your cake and eat it too a little bit. And you can, have some protection if you get a flush instead. Jeremy, I'm still pretty bullish on Bitcoin, so I still have some of those positions open. But this is a way to kind of give you the best of both worlds, if you will. Now, granted, that doesn't mean you're going to win. You could lose because they could just chop sideways. But this gives you a little bit of protection while also still going for some of that directional upside. Okay, let's move right along. Next up, we have the mag lag trade. Now, guys, I have a lot to get through today. Hope none of you guys have lunch appointments because I have a lot to get through today, but I'm going to try to power through it as quickly as I can. So here we have the SPY versus the Qs versus the Mag 7. Does anyone notice anything about these? This is 6 months, by the way, 6 months of data on each. Anyone notice anything about these three tickers? Well, here was the high on the SPY. Here was the high on the Qs. Here was the high on the mags. So they're all correlated, but what's different about the Mag 7 versus the SPY and the Qs? They're basically a mirror image except for one thing. The Mag 7 is lagging behind. And that is normally the exact opposite that you would see. What you would typically see over a 6-month recovery is the Mag 7 outpacing the Qs and the SPY. We are seeing the opposite. We are seeing the Mag 7 lag behind. Does everyone see it now? Same exact time periods. SPY cracked all-time highs. Q cracked by a little bit better. Mag's just there right now. Okay. So what's going on here? Well, we've got Apple killing us. We've got Tesla killing us. We've got Meta just barely cracking. And then we've got Google churning ahead. Amazon really doing well. Nvidia really doing well. And Microsoft dominating. So we don't have 6 out of 7 or 7 out of 7 dominating. So some people might say trade the laggards, trade the slowest group, either Apple and Tesla or Apple, Tesla, Meta, or Apple, Tesla, Google, Meta. Just trade the ones that are lagging behind if you want to do the catch-up trade. I don't like that. While I think the mags will catch up, I think it's just as likely that they'll catch up by Nvidia hitting 250 before Apple does. Now, I don't think that is, I'm not saying I think that. I'm saying I think it's a coin flip. Apple could go on a run and recover, or Nvidia could just keep churning and hit 5 trillion market cap, or Microsoft could. So just before I move on, do you guys know what I'm saying? What I'm saying is, as a group, I think the mags will catch up and start outperforming. But the way in which that happens, I think, is a coin flip as to whether Apple and Tesla and Meta make the move, or Microsoft, Nvidia, and Amazon just keep ripping, and they themselves, by outperforming, bring the mags up. I think that's a 50-50, but I think either way, mags will make that move. Hopefully that makes sense. It's a little bit of a nuanced argument, because I believe that momentum is very powerful. So I wouldn't be surprised if it's all in the back of Microsoft and Nvidia. But I also totally wouldn't be surprised if Apple and Tesla get ripping. I mean, you guys know I have some of those all-time high long-term trades on Tesla. Charles, MAGS is the ticker, MAGS, and it stands for Magnificent Seven, which is Apple, Tesla, Google, Amazon, Microsoft, Meta, and Nvidia. Okay, so how do we trade it? How do we trade it? Well, the way that I would like to trade it, if you guys were in my shoes, is the mag lag stack trade. Okay? So what you do is you put on a position every week or every 2 weeks or whatever you're comfortable with a longer term debit spread, where you stack the position over and over and over. And what you do is you give the market time to make the move that you're asking it to. Now, I am guessing that you guys have no idea what I'm talking about when I say that. Give me a yes in the chat if you're like, Nate, what the heck are you talking about right now when I say the mag lag stacked trade? Good. Okay. I figured that. Okay. Well, I'll come back to this in just a moment. But to do that, you have to understand debit spreads first. And the key to the debit spread begins with a line in the sand. So I'm going to give you a quick recap of what we talked about yesterday. By the way, if you missed yesterday's debit spread training, please go back. It'll be in your members areas. If you're a member of any of my services or Opening Playbook VIP, go back and watch that. But the key is that a debit spread starts with a line in the sand. It could be above the price for a directional debit spread, or it could be below the price for a defensive trade with less ROI potential. What it means in practice is that if the stock hits expiration anywhere above this level, this trade is a win. That's the basic definition of a debit spread. Okay. By the way, if you guys were there yesterday, don't leave yet, because I'm gonna pile on the stacking idea here in a minute. So don't leave. For a bullish spread, it means your winning zone is anywhere above the line in the sand. So the key here is that we're creating a ton of winning scenarios because we choose a line in the sand versus having to get timing and direction and exit all right, which is really what I believe in as a trader, is flipping those scenarios in your favor. So in the bullish example, price can go up, price can go sideways, price can go down a little bit, price can even go down a lot and then bounce back above, like happened to Microsoft with us. And as long as it finishes above that line in the sand, I still win, period, end of story. The only thing I care about is that on expiration, it finishes above. And the cool thing about the debit spreads is that whether we nailed the direction and it finishes way up there or barely above or somewhere in between, doesn't matter. We get the full max value in every situation as long as it finishes above our line in the sand. So you could go way below price, like I do, or like I often do, 1, 2, 3, 4, 5%, however much you want to go. You could also go above the price with the exact same structure. In either situation, the principle is the same. The stock has to finish above the line in the sand that you choose, because you can choose whatever line you want to get that full profit. So in one case, you're starting with the price already above it, right? So if you put a trade down here, your line in the sand is here, you're starting out with the price already above it. You're already in the winning position before you even, activate the trade. But in the other situation, you're requiring a directional move. So if you make a trade with a line in the sand up here, you're starting below and the price needs to cross above that line in the sand to get you into winning position. Well, what does finish mean? Well, that's where the expiration date comes into play. You can pick any combination of line in the sand and your expiration date. You can give it 7 days to make that move, 14 days to make that move, 21 days, and that's going to determine your profit potential. So these combinations of how much time you give it and where you're placing your line in the sand is where all the magic happens on a debit spread. You could have a trade that you give it a short amount of time and a relatively tight cushion underneath price, and you might make 55%. Or you could make it have a positive move in that same time, and that would jack your ROI potential up to 125% ROI. Or you could give it more time, which is going to lessen your ROI. Or if you wanted to give it lots of cushion and a small amount of time, you're going to shrink down that ROI. Why? Because the market knows that stock is not likely to dip 8% in just the next 7 days, right? You're shrinking the amount of time for it to go down. But if you give it 35 days, now the market says, well, now you're giving it more time, and so we're giving you more profit potential for the time that you're giving the trade. So that's the conceptual understanding. But what are we actually doing? Well, for a call debit spread, which is what I'm doing 99% of the time, it's going to look something like this. You're going to buy a call, and then you're going to sell a call on top of it, creating that line in the sand. So the current price is 101. You buy 99, you sell 100. Now anything above that red line is a profit. Anywhere above the sold option is a max profit on a debit spread. You have to know three things: max value, what you're paying, and the potential reward. By the way, guys, I'm going through this very quickly, but don't worry, there's a 90-minute training for you in the members area. So the max value of the spread is always the width of the spread, which means the difference between the strikes. So if you buy the $99 call and you sell the $100 call, your max value, the most that spread can ever be worth, is $1. If you were to buy the $990 call and sell the $1,000 call instead, now your max value is $10. Or if you were to buy the $272.50 and sell the $275 call, the max value is $2.50, right? So it's always the width of the spread. As long as you know the max value of the spread, everything else should start to make sense. For example, if I buy the $99 call and I sell the $100 call and I pay 80 cents for the trade, how much profit can I make on the position? Well, now that you know the max value, it should all make sense. The max value is $1 because 100 minus 99 is $1. You paid 80 cents up front, so you have the potential to make 20 cents. That's the remaining value left on the trade. If you do a wider spread, 272 and 272.50 and 275, and you paid 125, now what's your profit potential? Well, same thing. The spread gives you your max potential, in this case 250. I paid 125 up front. That means I have 125 left of potential on that trade. So again, as long as you know the value of the spread, you will always be able to understand your risk to reward. So pop quiz. I asked this yesterday and everyone got it right, which I was very thankful for. But I know it's not common sense when you first learn a debit spread, because you just think I'll pay the value that it's asking. If I have the ability to buy a 230 and sell a 235 Apple call for a 525 debit, should I take that trade? What if it's guaranteed to win, guaranteed to finish above 235? Should I take the trade? The answer is no, right? Because it can only be worth $5. So if I pay $5.25 for it, I can't make any money on the trade. So that's really important to understand the value of the spread. So this is exactly what I would do with the mags, but instead of it being a one-off trade, I would simply stack a new debit spread every week. Then I would use a good till cancel target so that anytime we get a pop in this trade, in the stock or in mags, I am locking in profits. So for example, I could buy the August 22 $55 call. Lee, I can't actually open it because I'm not the host. I need Deanna to open it. She's probably doing 9 other things right now. But Deanna, if you can hear us, you can open up the chat. If you buy the August 22 $55 call, you sell the August 22 $56 call, You pay about 48 cents. What I would do then, in this case, is I would put a good till canceled target of a 74-cent credit. So my ROI there is 54% if I hit the target. Why am I doing that? Well, because if the market pops at any time between now and August 22nd, I can go ahead and take my money and run versus having a whole bunch of positions that I'm waiting to expire. So let me walk you through the idea of stacking like this on a chart, actually a real chart example, and show you how powerful this is. I personally think this is one of the most powerful ways to leverage a portfolio, and it's how I would trade the mags right now. So you take a debit spread here, right? You're looking for maybe a 1 to 2% move up, depending on how you want to do it. That's typically my balance. And then you're setting a target for a partial profit on the spread. And you give it a nice long window to make that move. What's your window? It's your expiration date. So in this case, you give it 30, 40 days to make that move. Now, it can go down or sideways or up and down or lots of different things during that 30-day window. But as long as we get that move at any time during the window, a big enough pop to get our value at any time during the window, the broker is going to cash us out with an automatic profit if we have that good till canceled order set up. So if the market goes right up like it did here, it's just going to cash you out quickly. You had 30 days on the trade, but you were out within about 4 days because the market made a move up. Then the next week, what do? You set up a new trade. But here's what's really important, guys, with the stacking idea. You're not just setting up a new trade. You're not just looking for the next move up. You are resetting the clock for another 45 days or 30 days or 60 days, whatever you want to do. But in this case, another 45 days. Do you see that? Every week, you are resetting the clock to give the market more time to make the move. Now, of course, the market won't always go straight up and hit the target before the next week. Like this one, it just turns sideways, right? So now, what do? We set up one trade, hit the target. We set up another trade. But by the time the next week rolls around, the first or the second trade, the middle trade there is still open. So what do? We just stack our next trade and we get a better price on it. And then we set a new target with a new 45-day window for the new trade. Remember, we're just stacking the high probability trades and letting the market do the work, and we're resetting the clock over and over and over again. In most cases, the market's going to make the move up and hit our target within the next 30 days. And you just keep stacking, stacking, stacking. And of course, very, very importantly, you reset the clock over and over again. So you're giving the market more time over and over again. The majority of trades on good assets only need about 10% of the time to give you a win. Okay, so in other words, if I go in there today and I set, in my August 22nd trade up on the mags, MAGS is the ticker. Someone asked what the ticker is. It's MAGS. If I go ahead and set up a debit spread right around the current price with a max value of $1, and then I go set my target for about 75 cents credit, most of the time I'm going to hit that target not in 30 days, but in like the next 15 days and often in the next 5 days. The SPY, the average was like, I set up the target for 45 days and the average was out within 5 days. So it was like 10% of the time it was hitting my targets. We do it again and again and again, and we just keep stacking. Even when the market slows down, we're still stacking the trade. Why? Because we're getting a better price and we're giving it more time. Better price, more time. Better price, more time. It's like cost averaging, but with risk-defined trades that have a high probability of hitting. And in this case, as we keep stacking, if the market recovers, what's going to happen? Because we gave it enough time, it's still going to hit all those targets if it recovers, right? So that's the beauty of the stacking. It's like cost averaging, getting in at a better price, but with risk-defined high probability trades over and over again. Yes, ticker MAGS. Now, what strike price do you use? How do what do you do with your targets? Well, I have a handy dandy guide for you. Let me grab it for you. Here's the cheat sheet. Okay, so it's not a trade signal. We're not looking for an entry point. We are looking to basically replace an investment idea on a ticker we like by stacking trades. So notice, we're not trying to time the market. We're not trying to find trades. We're using options to create a better investing dynamic. What assets would you use? You'd use assets that you're willing to buy and hold anyway, high performing over the long term. I typically look to do this Thursdays between noon and 4 p.m. Use a debit spread, expiration close to 45 days. Now, people are asking what strikes. I use the two closest strikes above price. So if MAG is at 55, I would use 56 and 57, right? Set the take profit around 25%. So you multiply what you pay times 1.25. If you pay 50 cents, multiply that by 1.25, you have about a 60-cent target. Okay, so rinse and repeat. That's the whole strategy. Now, I have a deep dive strategy that's a lot deeper. But for now, this will give you a pretty good idea. You could do it as wrapping the strikes as well. You could do it below the strikes. You could do it a million different ways. What I'm giving you with the one and two strikes right above price is the highest profit potential. I'm giving you basically the one that if you wanted to go for the most aggressive, not the most aggressive, but the most aggressive balance of consistency, what you could do. So I am not waiting for this to expire in this stacking trade because I don't want 8 trades open with risk. I want them to circulate and recycle my profit as quickly as possible. Okay, does that make sense? That's the quick version. We have deeper strategy. You will have to spend some time going through the deeper strategy, but does the concept make sense? Okay, so let's take this idea into hyperdrive, something that I could never do before now. So instead of just stacking on one ticker, which I don't mind doing, by the way, SPY and MAGs, I'm a big fan of doing it. But instead of waiting for that waterfall income to hit and basically only being able to do it once a week, because you can only really do it once a week without overexposing your risk since it's the exact same ticker. What if you put on a new higher probability trade every week on the top assets, or twice a week, or every day? So what if you did it like this? Instead of having this chart, which by the way is great and has worked extremely well, but what if you put it in hyperdrive and you did something like this, where you might have 20 different assets going, all ranked as the top probability, all set up with the same structure that could fire off at any given time. You could do one a day, you could do twice a week, whatever you want to do. Well, that's really the goal with the income machine. The idea was to take this idea of having lots of different opportunities all the time and not just waiting for one asset to work out, but going to wherever the best asset was and stacking up those same opportunities. That way you get high quality income opportunities on a consistent basis, and not ones you just stack up blindly, but with the exact trade details to get the biggest edge possible on every trade. So again, imagine instead of just kind of blindly stacking, which I think is great, by the way, but instead of blindly stacking, what if every single one you took was dynamically priced to give you the best advantage over and over and over again? I don't know about you guys, but I think that would pan out pretty darn well. And so that's what this income machine is all about. If you guys don't know what the income machine conceptually is really all about, it's about stacking up those kind of opportunities, not blindly, but with the biggest possible edge on repeat over and over and over again. So what I'm going to do, hopefully the concept made sense, and we can dive deeper and you can check your members area for the debit spread training. What I'm going to do now is I'm actually going to walk you through the idea of doing this with the income machine. Okay? Because the income machine is going to take it, in my opinion, to a whole new level where you can use the concept, but it's not just going to be conceptual. It's going to be spitting out real-time trades every single day on the best possible opportunities. Brent, typically that's what I would do. I would not do it on the same stock over and over again, unless it, maybe like SPY or the mags that you really like. I would do it consistently on the best opportunities found by the income machine. Okay, so let me pull that up. I'm gonna walk you guys through the income machine. Give you a chance to try it for free if you guys don't already have access, which hopefully you already have access. You've been using it. Let me pull that up real quick. All right, and then you guys tell me if you are seeing my screen once again, the screen that says I want to give you access to the income machine for free. Okay, so that's what the second part of today is about. Is getting anyone who does not have their hands on the income machine yet. We have to make a decision, guys, in the next week or so on what we're going to do with the income machine. If we're going to keep the opportunity to get it for free a little bit longer, if we're going to cut off the upgrades and all that kind of stuff. So if for whatever reason you haven't taken action yet on the income machine, please do pay close attention to it, and then I'm gonna give you the opportunity here at the end. All right, sorry, sending a note to Deanna there. Okay. Oh, by the way, before I jump in, real quick, I have a whole bunch of stories from you guys. I'm gonna share some of those. I just want to be clear; these are not people that we met with. I'm not a financial advisor. I'm a publisher. I'm giving you ideas, all that sort of stuff. So I just want to make that super clear because I am going to share some really cool stories that many of you wrote in, and I want to just be clear on that. So without further ado, let's give you an opportunity to get your hands on the income machine for free. Yes, FREE. That is real, no credit card required. And the idea is exactly what I just talked about. How do you get extra income in the most effective way? Whether it's $250, $500, or $1,000, you choosing your path, your risk appetite, your own investing goals. After using my aggressive income approach, which went from 10K to 50K and then getting a little over 100,000, which I was really pumped to hit my $100,000 goal last year. I'm set on a mission unlike anything that we've ever done. Frankly, I don't think anyone has ever done what we've done with the income machine that solves one problem no one else in the trading world has. Because most income methods box you into a single approach. They're either built ultra conservative or they're for the risk hungry investor who's looking to double their money. There's no flexibility, no middle ground, and there's no way to actually adjust the opportunities based on your desired approach or to shift your risk appetite based on the market conditions, right? Because sometimes you want to be more aggressive, sometimes you want to be less aggressive, right? But most approaches, they're just built for whatever the system is. But what if there was an income system that could do a freaking heck of a lot more? Let you target $250, $500, or $1,000 plus, depending on what you're most comfortable with in that exact moment. Well, that's exactly what the income machine is designed to do. It's the first income tool that's ever been built like this, designed to help you dial up or dial down how aggressive you want to be, literally with a couple clicks of the button. Every day, it uses my proprietary formula, scanning the entire market, and identifies the strongest, most ideal income opportunities for you. And then it breaks it down into 3 specific trade ideas so that you can choose the route you want to go. Conservative approach, that's going to be the highest win rate, limited risk, targeting around $250 a trade. The balanced approach, that's if you want to go for a little more upside, shooting for around $500 a trade. Or of course, the aggressive approach, if you want to chase those $1,000+ payouts with the most, calculated trade setup to still give you a cushion on the trade. And regardless of which approach fits you best, you'll get exactly what you need from the income machine. You're going to get the exact stock and the exact option, the hold time, the break-even price, the expected income potential, even the calculated odds of success. No guesswork, no noise, just a direct income signal where you have the power to pick the opportunity that you like best. So whether in retirement, you're scaling up a side hustle, or you're just getting serious about finding new ways to help build monthly income, the Income Machine lets you pick your path, and then all you have to do is press go. And today, I'm going to give you a chance to try it for free. You don't have to pay a dime, not even a credit card required. That way, by the time the class is over, you'll be able to start using it right away to access the top income opportunities already selected for today. Yes, literally today, you can load it up and find some trades targeting 250, 500, or $1,000 right from any standard brokerage account. Now, the reason the Income Machine works is because of the underlying options phenomenon that I use in all of my top income strategies. Whether it's overnight options, which is now over 78%, whether it's two-way, which is now over 80%, or weekend income, which is which is 100% win rate, all on live published trades. With the Income Machine, I program something that's even more powerful all in one place that helps us automatically source the best income opportunities each and every week, where you have the power to pick the approach that fits you best. Now, keep in mind, I'm not a financial advisor. I'm not going to tell you which one you should choose. That's obviously up to you to decide. But I did the best I could to make this tool incredibly easy to use, regardless of your preferred trading style or what your income, whether you want to be balanced, aggressive, whatever. Like Tim C., who wrote in that he's still working full-time, enjoys hobbies like golf in his free time. And according to Tim, he would like to supplement his income and scale his investment account before he retires. But Tim said he doesn't want to blindly swing for the fences. He wants something that's consistent and reliable with a strong track record. So anyone out there looking for the most conservative income opportunities, well, I've got you covered. Or we've got people like Tyler G. from North Carolina. He said he's a dad who balances a day job with running his own business. Me too, Tyler. And he might not feel ahead financially, but he's motivated. So he wants to spend time with the kids and build an account in a way that doesn't steal time from them. With that in mind, folks like Tyler might not want to be slow and steady. They might want something that's more middle ground. So if that's you and you want to shoot for that slightly larger income potential while still maintaining a high win rate, well, the Income Machine does that too. That's what that balanced approach there in the middle is for. But it doesn't stop there, because we heard from tons of people like Karen from Tucson. Karen says likes to target the biggest returns and lean into a little more volatility if that means a shot at more money on the trade. Why? Because she has a mission. She wants to replace what didn't work, tap into the highest risk-reward opportunities, and hopefully fund the travel dreams she's been putting off. So if you're someone who also wants to go for the biggest income potential, targeting $1,000 plus, that's based on a $2,500 stake, well, that's why there's also that aggressive income approach baked in automatically to every stock that's looking for the most bang for the buck. So 3 different approaches for 3 different types of investors. And regardless of who you are or which approach might fit you best, the Income Machine does it for you, calculates it for you, and puts you in control. And it gives you the exact trade criteria to follow along if you like what you see. So I'm going to walk you through some more of those stories. We got 1,500 plus stories from people like you, which were incredibly amazing and humbling to read. And it's going to show you how this is designed to work for all walks of life. And obviously, my goal is that you put yourself in those shoes. Hey, how can this work for me in my current position? Because that's what I want it to do. Because you'll see firsthand that this was designed to help you navigate the market for anyone and everyone, regardless of your financial status. So if you fall into the everyone category, yes, I am talking to you. And then finally, at the end, of course, I'm going to be dropping the link in the chat where you can access the Income Machine at 0 cost. Now, Wall Street wants you to think that making money from the stock market has to be complicated and time-consuming, and that's going to take years to get a payoff. But the truth is, it only takes a few minutes, a couple clicks of the mouse, that you can actually put yourself in control and start targeting your own income. And my favorite thing about what I do for a living here is showing folks how to target income from the stock market on a consistent basis. That's what I live for now. Doesn't matter if you've been trading for a decade plus like I have, or if you're literally just getting started. With the Income Machine, these types of opportunities are more accessible than they've ever been in the history of the world. I really mean that. In history, there's never been a time where a tool like this could have existed to make this so applicable and hands-on for you. So let's say someone has $2,500 to invest and they want to use the Income Machine. Well, for starters, we had tons of people like Linda A. from Texas. She said she's a full-time side hustler with a dream to retire her husband earlier than expected so their kids can spend more time with their dad. She doesn't want to gamble. She doesn't want to overcomplicate things. She wants something stable something steady, something that works. So let's imagine it's February 10th this year, a couple months ago, and Linda pulled up the income machine and wanted to set up with the least amount of risk. Well, at the top of the list, she would have seen Visa. Visa ranked as an ideal income generating stock that week. And anyone who wanted the safest play on Visa could have just clicked the conservative button. And with one click, they would have seen all the trade details. So it's not like the income machine is giving you ideas. It's giving you the exact opportunity, the ticker to type in, the exact option to trade, the entry price, even the income potential, all there baked in for you. From there, folks could have simply placed the trade in a standard brokerage account or approved retirement account. And when it all worked out, automatically cashed out for about $302 in the account on the conservative approach. No guesswork, no babysitting the trade. About 60 seconds of quote unquote work, and folks like Linda could be $302 closer to making that dream happen. Next up, we had many students like Kendra C. Kendra mentioned that she's a busy working mom in her 30s with a young family, something my wife can certainly relate to. And between work, school runs, late night dinner duty, time is very tight. And lately, she's been thinking about building that second income stream, something that could help her cover more travel and new experiences with her husband and kids. And ultimately, less stress in the day-to-day life. Who doesn't want that? Now, Kendra doesn't really want those wild swings. She doesn't want the highest risk, but she